Hi, this is Lauren with Verivest, and today we are meeting with Martin and Shawn from Bequest Funds. Welcome, guys. We're really excited to speak with you today.
Thank you.
Thanks for having us on, Lauren.
Yeah, absolutely. So I'd love to just get started and hear about how you ended up where you are today and give us a little bit of your origin story.
Sure. So I'll kick it off. My name is Martin Saenz, and how I got started in entrepreneurship was in about 17 years ago. My wife and I founded a government contracting company, and so we've been down the small business road of hiring people, building a company, and we had sold that in 2013. And at the time of selling that company, I was looking for the next activity to get into. I was still managing a portfolio of rental properties that we still own today. And so, I stumbled upon the mortgage note industry, and I started buying distressed mortgage notes whereby the homeowners had not made a payment in 4 or 5 years. And I just started buying those mortgages, started making connections with the homeowners and creating loan modifications and other kind of creative solutions to help the homeowners stay in their homes.
Right.
So that's really how I got started into the mortgage note industry. Shawn and I connected, some 5 years later, and we've been partners, since that point. And, for myself personally, I have helped over 1,000 homeowners stay in their homes with these types of creative solutions. However, as of last year, Shawn and I really wanted to build a legacy play for ourselves and our investors. So we launched Bequest Funds, which is an income fund, and it pays a high yield return to our investors on a monthly basis. So that's really how we got, to where we are today.
Yeah, absolutely. So you guys are fairly new then.
Yeah, well, the income fund's fairly new, but we've been in this industry 8 years.
Right. Yeah, absolutely.
And so my story is a little bit different. I kind of grew up in, went to college, got a degree, did what everybody is supposed to do, and that's, find a nice job in corporate America and begin climbing the ladder. And so, forever, like that was my dream. Like I'm going to go, be head of some big department in some big corporation. So I began climbing that corporate ladder, doing everything right, went and got an executive MBA, and that meant I was ripe for management and corporate America. But after like 15 years climbing the ladder, I'm like, really, is this really what my whole career is going to be, like trying to beat out the next person to get that next promotion or that next bonus or raise or whatever. And so, it wasn't long ago, like 5 or 6 years ago, I'm like, this isn't right. This is like, why am I working for somebody else? Why am I building so much value for somebody else? I need to start my own business. And so I dabbled in real estate, even when I got into corporate America, like my weekend job was fixing toilets and cleaning up after people. And so, I was always kind of a real estate guy as a hobby. That was my side gig. And in 2017, Martin and I connected, and I read one of his books, a book that he wrote. And Martin and I connected, and became fast friends and fast business partners, and we began to build an organization around buying non-performing mortgages. And that's what we did for years. And we realized that we were producing a product that was so valuable, and that's reperforming mortgages. And just last year, as Martin mentioned, in 2019, the idea of Bequest Funds came about. It wasn't until March of 2020 that we were able to launch the fund publicly. But this product, these reperforming mortgages, are just such a powerful vehicle to invest in for long-term cash flow and growth. And so we wanted to make an opportunity for the regular investor to be able to buy the same asset classes that these large hedge funds, insurance companies, even the federal government buys mortgage debt, we wanted to make that same offer to the regular investor. And so that's what we came up with Bequest Funds.
Yeah. That's amazing. Thank you guys for sharing your background. I'd love to hear how you source deal flow and what your acquisition strategy is.
Yeah, thanks, Lauren. So I lead the acquisition team here at Bequest Funds. My team is responsible for underwriting and finding all the mortgages that we buy. It's a private market. The secondary market is an interesting market from a mortgage perspective, and there's niches. And we focus on one little corner of the secondary market, and that's the reperforming mortgage market. And so because we used to produce these mortgages and sell them off into the secondary market, we are now experts in buying the same assets we used to produce. And so we understand, how to buy a product because we used to produce it. So we know the ins and the outs of the product. We also are embedded in this private market. The secondary mortgage market in general is a private market. And so in order to get into it, you have to have connections, you have to have a reputation, you have to have the knowledge on how to run due diligence on these assets. All of those we have, and that's what's embedded in our team. It takes years and years and years to get into the community. It's a private community that's focused on relationships and trust. And there's a lot of proprietary data that's passed back and forth between people that are buying mortgages. And so all that trust has to be established beforehand. We like to trade with the same folks over and over again. So you establish those types of relationships. We've been doing this for years, obviously buying non-performing mortgages, and the same folks that we buy mortgages from today, back in the day, used to sell us non-performing mortgages, now sell us reperforming mortgages. And so those same relationships we've had over the years help to source deal flow for us, and being experts in the reperforming mortgage business just allows us to buy product.
Yeah, absolutely. And I'd love to hear kind of what key markets you guys operate in and why you select those markets.
So we purchase mortgages all across the United States.
Okay.
For us, it's more significant, who the homeowner is, mm-hmm. and what their ability is to continue to pay on their mortgage. Mm-hmm. So, there are borrowers at every level of income,
right?
That we have, housed in our portfolio. But, more than any specific region, we're looking to purchase nationwide, and we're vetting the property to understand, the valuation of the property, right? Because that is the collateral that backs the mortgage. Mm-hmm. However, that backs the promissory note. However, we're looking at the borrower and their ability to pay at the end of the day.
Yeah, I would just add briefly that we look at loans. We underwrite loans through the eyes of a real estate investor, which is very different than how a bank underwrites the loan. The collateral to us is more important than anything because one day we may have to take that collateral back. And so we look at the eyes of the collateral differently than say, a bank. We just don't take any appraisal that comes and assumes that that's what the value of that property is. We actually look deep as real estate investors ourselves. We look deep at the collateral. And then, as Martin mentioned, we look really deep at the borrower's ability to repay. Now, we only buy mortgages whereby borrowers are making payments. So these are performing, what's called reperforming mortgages. So they're making payments. We just have to make sure they continue to make payments. And so, again, we're looking at the borrower, specifically their ability to repay, the same time we look at the collateral.
Yeah, that's great. And what would you say is your investment philosophy? How do you determine whether a deal is worth doing? I know you've mentioned that a little bit, but I'd love to hear a little bit more.
Yeah, so we're looking at a few different factors when evaluating an investment opportunity. For one, these are performing mortgages that are going into Bequest Funds. So we need to understand the pay history that's involved, the type of seasoning that asset has undergone, as well as the collateral. So property valuation, what's the lien status of the collateral, and so we'll vet both the collateral and the borrower's ability to continue to pay.
Yeah, and I would just add that our investment philosophy is the U.S. housing market underpins our long-term investment strategy, and so we are bullish on housing for years to come, based on a very simple philosophy of supply and demand. And we're kind of seeing that play out today. These are the same philosophies we built the company on years ago, that cost to replace housing in the U.S. will continue to go up. And so, as it relates to the land, the wood, cement, all of these major, components will continue to go up as demand increases. And so we know that housing will continue to go up, obviously in different spurts. And so we're bullish on housing for years to come. We know that supply has been impacted, even from, back in 2006, when you had, an enormous amount of supply come to the market. Supply has not met demand, will not be able to meet demand. We're seeing that now. We're bullish on housing for years to come, which is why we invest in the U.S. housing market and why we actually invest in owner-occupied houses across the U.S. in now 34 states. There's no reason why we won't be in every state. And so we're bullish on the housing market for years to come.
Yeah, that's great. And how do you generate value once you've made the investment? What's kind of your risk mitigation strategy that you guys put forth?
So one thing that we look at as a metric is investment to value. So our portfolio sits under a 65% investment to value. So if you take a house that's worth $100,000, we're only looking to be into that investment for $65,000 and under. So in other words, we'll have a $35,000 paddy on that investment. So if and when the market does correct, we will be able to absorb, hit on fair market value decreases. So that's a very important metric. However, how we operate our asset management team is we monitor the performance of the assets on a daily basis. So our asset managers, they have all the tools available to them, and they have all the expertise, whereby they're monitoring the performance, the payments coming in on the borrower's accounts. And if there's something that's off, they'll make communication with the borrower and figure out what's going on. We also double up an effort with a licensed servicer that sends out monthly communication, loan account statements, year-end tax forms. So there's an abundance of communication going on between us on our side and the borrower on their side. So we feel like we're first in mind every month when the borrower has to make that payment.
Yeah,
let me just reemphasize what Martin said, because it's really important. We own the mortgages and we have a licensed servicer who services the debt. And so that's no different than a mortgage that I have on my house or a mortgage that you have on your house, Lauren. But I can tell you, have you ever got a call from the company who actually owns the mortgage and not just services the mortgage? Well, I can tell you that all of our borrowers know that we own the loan. Yet there's somebody else servicing. And so our asset managers are hands-on, develop relationships directly with the borrowers, even though we have a licensed servicer servicing the debt. And so, as Martin mentioned, we're very hands-on. I've never got a call from the company who actually owns my mortgage. I've only ever heard from the servicer. And so, our philosophy in asset management is just hands-on. We do things differently because we expect every asset that we own on the books to perform, and And so it's really a high touch business. We're making sure we're all over the assets.
Yeah, absolutely. I definitely see companies who structure themselves that way. The outcome is always far greater for them. So it's great to hear. And obviously you guys have a great partnership. You've spoken a little bit about the relationships that you have throughout the business as well too, but please elaborate a little bit on the key players involved that allow you to execute your acquisition and asset management strategy.
Yeah, so as I mentioned, Martin and I are not just business partners, but friends. I'm sure I drive him crazy on a daily basis. He would tell you that as he's shaking his head. Our hourly basis drives him nuts. But we are friends, and we love what we do. We are the driving force behind this organization and growing. As we started just, years ago with just one employee, we're now up to 8. And so every employee on our team is a critical piece of the puzzle. And so we have an acquisition team that is out focusing on the right assets to buy. We have an asset management team that's focused on making sure these assets perform. We have an investor relations team that's focused on making sure all of our investors get all the information that they need when they need it, and keeping them updated on how the fund is performing on a quarterly basis. So, we have an entire operation here focused on making sure the fund performs, making sure we can buy quality assets, making sure that our investors are happy with their investment. And so Martin runs the investor relations team and the asset management team, and I run the making sure that the business performs and making sure that we're buying assets that are in our wheelhouse that is exactly the return that we expect. And so we have got phenomenal leaders in every part of those teams, and so all of that needs to be in place for our operation to run flawlessly.
So I'll summarize it slightly differently in just within 20 seconds.
Yeah.
Management is Shawn and myself. We came into with the fund with $1 million of our own capital, so we have skin in the game.
Right.
So we are here on a daily basis, and we run the full value chain of the full life cycle for these notes, from acquisition, where Shawn's in charge of vetting these assets, bringing in high quality assets, to myself that's in charge of ensuring the daily performance on these assets are where they need to be. So there is full blown effort and control over what we're bringing into the portfolio and how we're managing the portfolio. And that is something that, was in place from day one and will continue to be in place.
Right. Yeah, absolutely. Both of you, thank you so much for speaking with me today. It was great to hear more about Bequest Funds and to really hear about how you guys got started and how you guys can continue to grow. So we really look forward to working together, and hope you guys enjoy the rest of your day.
Thank you, Lauren. Appreciate it.
Thank you.
Yeah, absolutely. Have a good one.